Alex, what do we have today on the editor's card?
So I was itching to say bad day at the office when you were talking about the new listing, but then
we're having a great day this morning, though.
But having said that, let's start with the two topics that we're going to be discussing today. I'm joined by Muralidhar Swami as well as Vishwanath Nair, and we're going to be talking first about the regulatory action by the Reserve Bank of India. We will also talk about the S&P Global upgrade on the outlook. But interesting, because Tamanna was just talking about what the statement from ECL reads, and they apparently are saying that there's no major business impact. And I saw Vishy, wryly smile about this, because it is going to be a significant impact, Vishy.
Yeah, so if you were to just look at where the business is at ECL Finance, right, 6,300 odd crore worth of loans on its AUM, on its balance sheet, and 4,150 crore of that is just wholesale loans. So to say that, oh, there is no financial impact because last year we decided to shut down this business,
would be patently incorrect.
Yeah, I mean, so it doesn't hold water simply because even if you were to say, do something with these 4,150 crore of loans, right, you can't enter any structured transactions, which means essentially you will have to wait till these borrowers pay you back and then close the account, which in the current scenario looks highly unlikely because these assets have been on the books for a very long time. Borrowers have not been able to repay that money. And according to the RBI's order, which I'll come to in a bit, there were issues with the way those loans were being dealt.
Okay, so let's talk about, so first, it's not right to say there's not going to be a business impact, but let's talk about why this came to pass. There are two aspects as I understand it, right? One is round tripping and the other is, pushing the can down the road. How does it work?
So here's how the RBI explains it. Essentially, what ECL Finance did as an NBFC license holder was that it sort of acquired assets from across the Edelweiss group, which means that there are a bunch of funds which would have lent to some real estate companies, some other wholesale companies. Yes. So you acquire all those assets, collate them, and then you sell it down to the ARC. Now, the problem, as you said, twofold, is the first one is the conduit aspect, which the RBI points out that ECL Finance allowed itself to be a conduit in the entire business. The ARC, once it had acquired the asset, they were also allowing funds from within Edelweiss Group to come into these companies. Therefore, the question of evergreening comes up, because evergreening is essentially that. You keep funding an asset so that it stops looking like an NPA. But these two problems is what prompted the RBI to take this action. And it's not something that happened overnight. The RBI has been talking to them for months on end. And what the RBI said is that instead of fixing it, these guys went ahead and did more complicated transactions.
But NBFCs are allowed to sell to ARCs. But
ARCs can only buy from banks and NBFCs. That's the RBI norm. But because the other entities in the group could not sell to the ARC, ECL was the route to transfer these assets to the ARC.
And that's the primary problem.
That's the primary problem.
So what happens from here?
From here on, you have to fix it. Well, you have to ensure that your compliance measures are in place. Your assurance function is strong enough to pick up any issues within the bank, within the entity, and the RBI has to be convinced that it is strong enough now. Now, that's the tough part, because convincing the regulator that we have done whatever is needed is something that companies typically take a long time to confirm. And because typically in other cases, the RBI asks for a third-party audit, in this one, they've not specifically mentioned that. So it entirely depends on the RBI's interpretation of what you've done.
Very quick last question. Of course, we'll see in just about half an hour's time. Beyond the sentimental impact, it's likely to be a business impact as well?
From what I can say, yes, because the NPA numbers are going to shoot up for ECL Finance. Edelweiss ARC's growth comes under question because it cannot acquire, it's acquiring and then resolving, right? So if the acquisition window is closed, you'll keep running down your AUM eventually.
Okay, fair point. All right, so that kind of answers several questions that you might have about ECL Finance and Edelweiss ARC. But the other big headline that we have been speaking about since yesterday has to do with the S&P Global upgrade on the outlook for India's credit rating. And Murli spoke with Siddharth Sanyal, and here's what he had to say about where India's rating should be.
Well, it's welcome that S&P and other rating agencies are noticing our strong and robust economic and macroeconomic indicators. So it's good that they have, put us on positive watch. But let me say that by any objective criteria, India should actually be rated one, if not two notches above where it is right now. So in a sense, they are behind the curve. And if you look at Indian paper that, corporate paper of Indian companies that float abroad, you will see that they are almost always much, much tighter than, similarly rated sovereigns. So the point I'm making is that India is much better position even than what S&P is making it out to be.
My apologies to Mr. Sanjeev Sanyal. I got his first name wrong. Let's talk about what Muralidhar Swaminathan is saying and taking from these numbers, because it is quite the statement that you're making, Murali.
Absolutely. I think I'm trying to go against the tide. Yesterday, the markets completely ignored this. But the point I'm trying to make, Alex, is that markets may have ignored for different reasons, but a long-term investor should not ignore this news. The reason why I'm saying long-term investor should not ignore is that this is one of the biggest actions that have come in the last 14 years or so. I think since 2006, the first upgrade from S&P since 2006 in terms of outlook. And it's the first rating agency to upgrade us post-COVID in terms of outlook. Now, this is only about outlook. We are not talking about rating. Now, that's a bigger action, but this is the first critical step towards rating action, which will happen roughly in 2 months. Now, I will add a couple
2 years, you mean?
Sorry, 2 years, not 2 months. So 2 months is budget. My apologies. So roughly in 2 years is what rating. I think for the first time they've set a very clear timeline that this could lead to a rating upgrade. If that happens, that's a big deal. Now, how does this connect with the markets today? The markets are nervous about the political results outcome, and that is for people who are doing trading. Now, if you are a trader, you will end up either winning or losing depending on how you take the bet. But if you are an investor, you will definitely win over the long term. Now, how will that play out? That will play out the following way. One, the new budget will come through, and the new budget will clearly take into account the extra 1 lakh crore that they've got from the RBI, and that can be put to good use in helping bring down the fiscal deficit, which is at the center of this S&P rating. Now, if that happens over a period of 2 months, you will see that the rating agency's outlook will change. Outlook towards us.
It's an interesting point, because just to add to that, 50,000 crore was the divestment target for FY24. Previously, it was cut to around 30,000 crore, and I'm actually not confident or sure as to whether or not that was hit. We'll know soon enough. But this 1 lakh crore that has come additionally from the RBI serves to bridge that gap.
Absolutely. So the point now is, see, I'm sticking my neck out. I'm not saying that the markets will open gap up today or the markets will react to that. We will know when the markets do, when the markets open. But the point here is that if you've been missing the bus for the last many months, simply because the Nifty went from 1,000 points every once in a month or so, from 19,000 to 23,000. So every dip is now an opportunity for a long-term investor. Now, what should a long-term investor do? Do conviction buying, go contra, don't worry about the political noise, that's for the traders. Now, politics will continue to play out, but policy will not change. Over the last 30 years, in fact, that is also recognized by the S&P rating agency. Over the last 30 years, policy has not changed. The governments, in spite of the turbulence, political turbulence you would have seen over the last 3 decades or so, the policy continuity has been there. Now, that's going to continue. The other important point, which I think there is a Citi note which is taken into account, is that the 80% of GDP, that is the public debt, which is above 80% of GDP, cannot be brought down to the 60% level, which was a pre-COVID level. Now, that is not a precondition for S&P upgrading the rating.
It used to be, though.
It used to be in the past. So that is not a precondition. So the point here is that I'm not saying you should go out and buy today All I'm trying to say is that this is an excellent opportunity. The market will ignore it for now for obvious political results reasons, but it may come back. But when it comes back, you may not have the opportunity.
Okay, that's a fair point.